Tim Vollans. Welcome back to F.A.C.E. Great to
Hey,
have you
buddy.
back. Quite
Yeah,
a
good to be back.
historic day, last 48 hours in the FX markets, very disorderly, kind of like crisis type of moves that, markets really can't manage. And well, maybe the markets can, but the world can't.
Yeah, that's probably a good way of putting it, to be honest. I think there's a big period of adjustment, I think, that's starting now. I think we're sort of finally getting a bit of a look at what the world's going to look like on the other side of this.
Right.
And the UK is going first. I think that's the message that I've been taking from it, is that the UK is the one to watch, because they're kind of recognizing that we can't try and do what we've been doing before and hope. It's like the old Einstein quote, isn't it? The definition of insanity, is keep doing the same thing and hope for different results. And I think, I've been looking into what the plan is. The government published a big, long plan and everything else. And I completely understand the market reaction to this in terms of like, oh my God, it means change. It means new risks. It means all of these things. But is it the wrong thing for the economy, over a medium term, a few years? And obviously a lot of that depends. The answer to that question is often it depends, but it could be. That's the way that I'm thinking.
The bond vigilantes are not just here in the U.S., are they?
Oh, no. Yeah. I mean, it's fascinating. I mean, I've been through this whole period. For me, has been just absolutely brilliant to learn from, because I imagine with a lot of other people as well, interest rates didn't really matter much for a long period of time because they were so low. It was like, well, yeah, they moved, they stuck, that was it, and then what do you do? And now you're seeing the kind of, the interest rate term premium is becoming something again as well, depending on how long do you want to hold that risk for, and how much are you going to demand to be compensated for holding the risk of buying these bonds in these different countries. And then you've got to factor in the currency risk. Is the government as well going to be there? Like for now, for example, Truss and Kwarting putting this plan forward. It's great. It's a great plan, I think. It's a great plan in terms of the big picture, not just what's going on now, but kind of addressing structural issues in the economy. And the UK is not alone in this. I think we're going to see a real battle in Europe over this shortly as well, when they talk about the fiscal side of things and the fiscal rules coming back into play that have obviously been suspended since COVID. But the UK is going first. They're making, sorry?
They've been suspended not just through COVID, but central planning of central banks.
Yeah.
Right.
Yeah,
I mean,
exactly.
We're talking 20 years now.
Yeah. I mean, that's exactly it. We've been through this era, and I kind of like, you look around the world and you see this populist kind of tendency. It's not like it's an uprising. I'm not going to get like political on all of that sort of side of things. Everything tends to be distorted by the media, it seems to me, for attention and clicks and everything. But it's just interesting. People aren't happy. That's the key message. People aren't happy with how the world is going for them and how economies are going domestically. You can make lots of arguments about the world being a better place overall, but that's not how a lot of people are experiencing it. We've had this whole period where we've been able to offshore all of these things to Asia, Eastern Europe, cheap labor, all of those things. And that kind of era seems to be over now. And everyone's sort of realizing that actually maybe we need to be doing more to be self-sufficient and improve our own economies. It's not just about globalization, although that is very beneficial as well. It's not a case of one or the other. It's just a case of redressing that balance. And that, I think, is really the big adjustment that we're coming to. And rebuilding economic capacity comes with a lot of government spending. And obviously from the West, we've exported so much of our economic capacity to the East that now taking some of that back is going to require more spending and higher interest rates. And I mean, even now, though, you're looking around at inflation versus interest rates. Interest rates are still pretty negative in real terms. They're starting to get more positive, but globally, that's the message.
Yeah, that's amazing. So the damage, even with negative rates, still real rates, makes you think if we, really had a positive rate environment, I don't think the structure of leverage will completely come down, don't you think?
Yeah, I mean, I think some of that structure, I think you've got to look as well at what the leverage is in. I mean, this is the other thing now. Is like
point.
you can argue now that what the UK government is now trying to do is they are trying to leverage up as well. Borrowing from the future, but they're trying to put it into, whether it works or not is another question, but they're trying to put it into productive investment. And I mean, I've kind of characterized it. I think Taleb actually had a great quote the other day as well, talking about the kind of the broken models of the economies with low interest rates.
Yes.
It's kind of incentivized grift. It's incentivized all of these things that have made society unhappy with the kind of inequality of it all, and they kind of see it as a lack of opportunity. And I guess that it has been too much. It's not been necessarily a lack of opportunity, but it's been, again, that balance of power. There's been too much power in the holders of capital, because they've been able to get more capital, leverage it up, pump up the housing markets, start up like crypto companies that didn't really, all kinds of grift, basically, that never really had any economic value to the majority of people. It was just self-enrichment in many ways. And now it seems like that is actually starting to change. I mean, I'm not going to say it's going to be a complete reversal and that the world's suddenly going to be a wonderful, happy, equal place, because that's not how it works. But there's definitely a swing in the pendulum in that direction.
What are the market implications?
Well, this is what we're trying to figure out, isn't it? I think higher interest rates than we've had recently is definitely part of that. Definitely, without a doubt, because you're going to have higher inflation, and so savers are going to demand, in all their different guises, savers are going to demand higher interest rates to fund all of this and take on that risk, like we're seeing in the UK. So I think that's definitely one part of it. I do think that we'll probably see commodity prices, continue higher as well. Maybe not immediately. I mean, all of this as well, you've got to look at the different time horizons. I think at the moment we're still in a kind of period of realization, and things might get worse in that sense before they get better as well. The economy is looking a bit shaky globally. There's a lot of things going on with financial sort of stability things. The dollar's so strong as well. So I think that. What do you think,
Tim? I've been raising the question since the BOJ actually did come in and try something, and it looks like they may be, if they blow through that, 145 level, 146 level. Are they going to come in again? And is there a chance for something concerted by the central banks to get together and try and restore order into the FX markets, if not reverse direction in the dollar? I've been told by people it's easier to depreciate your currency than to support it.
It is exactly that. Exactly.
So I mean, isn't that a card that Paul could play that would bring some stability to financial markets and actually help him? Because if the dollar weakens, things will get more expensive here in the U.S. for him to continue on his tightening campaign.
Well, I mean, this is the other thing as well, because obviously the other side of the dollar strength is that it weakens corporate earnings in the US as well, which obviously then makes things trickier for companies.
They're crying about it now.
That's it. So if your goal as the Fed chair is to slow down the economy by sort of making financing costs expensive, making earnings slightly depreciate as well, and all of those sort of all of those difficulties in that way for the business level, as well as increasing borrowing costs and all of the other things that we know about, then a strong dollar is probably in your favor for trying to bring domestic inflation down.
Okay.
So right. I don't think that even in the US.
So it's worth the global. So it's worth the global risk and the emerging markets.
Yeah. It has been until now. I think it's sort of, we are getting to the point now where things are looking shaky, and maybe I was just trying to look up the date there. I think it's the 12th of October, if I remember rightly. I think there's a finance ministers meeting, or at least there's a communication on the back of that that's scheduled. Whether they do something unscheduled is another question. But I mean, I think that what will probably end up happening, rather than Powell saying anything, no, they won't announce it. It will be something along the line, some kind of word soup where they'll kind of just piece it all together and say, that they're concerned by developments in financial markets and what this means for financial stability and so on. And as always, you've got to read between the lines on what they mean by that.
Yeah, and Powell is, not just a domestic guy. Right. I mean, he's looking at the world too, and how failures other places could impact our financial system. So,
of course, the
I
dollar
mean,
is the financial
it's a
system.
card to play, isn't it, for the Fed?
I mean, it is, but really, it's a Treasury decision as well. You know, it's at a finance minister level. It's not necessarily the central bank, and we've seen already, like even now, the UK. You know, you've got, and I mean, even in America, you look at California giving out the stimulus payments for inflation and the Inflation Relief Act. You know, the fiscal and the monetary side, they're not coordinating at the moment.
Yeah.
You know, they're pushing and pulling against each other. So there's a possibility that, you know, you could have Yellen come out and say, you know, as part of this finance minister meeting that, you know, they've been talking and things are getting a bit dicey basically, and they're going to be looking into it, you know, with a view to taking action if required, and hope that the market takes the action for them, you know, and takes the hint. And then obviously it smooths the path, which ultimately is what they want. It's the sort of stability, because they still need to tighten. But obviously, if they tighten too fast, then the risk is that everything collapses, and then they have to sort of untighten while inflation is still high, and we get that real stagflation scenario, which they're trying to avoid. So it's a tough balance at the moment. And I mean, I think that potentially we might get that maybe in the next sort of meeting or two. I think we'll be getting some of the data really coming through that's making them question the logic of continuing. And certainly by the beginning of next year, I think the idea that they'll stay high through all of 2023 will come into question. It will be challenged. Yeah.
Okay.
But looking around the world, mate, it's fascinating times. I love it.
Just being, you know, with this action in fiat kind of makes you, you know, of course you could say, yeah, the dollar, but it makes you question all fiat, doesn't it? And almost makes you want to just, you know, go play with your gold and silver coins.
You see, this is where I say it as if it's something out there, but I have quite unconventional opinions about that, because there's this idea of sound money that I disagree with entirely.
Okay.
Right? There's a reason we don't have the gold standard anymore.
Okay.
It broke because it wasn't flexible enough to take shocks, basically. If you really want to dumb it down, that's what it comes down to.
All right.
So obviously, yes, it's good to have gold and silver, as, you know, and maybe even Bitcoin. If we go down this kind of MMT route, there is, I think there's definitely a case for, well, I say MMT or deficit spending. You know, I kind of lump them together sometimes. Maybe I shouldn't, but this kind of deficit spending route, maybe you can turn around and say, all right, it makes sense to put a little bit more money into these kind of outside money, you know, gold, silver, Bitcoin, that kind of thing. It makes sense to have some of that more in the portfolio than perhaps you would have done in previous years. But this idea that money isn't going to be sound anymore, or any of those things, I just think is, I don't think it's going to bear out. I really don't. You know, fiat currencies exist because they can be a release valve. You know, that's why they're popular, because they are able to be flexible, to allow the economy and the world to sort of keep on moving. You know, to sort of, I think once we've got this level of life that we've got now, this stability of life in many ways that we've got compared to, you know, historically what our ancestors had and all of those things, we kind of forget how bad things could be if we didn't have these mechanisms, such as being able to just sort of print money out of thin air and, you know, sort of smooth the effect over the next, you know, 10, 20, 30 years, whatever it might be.
Okay. Yeah. So we need the central planning, and we need a central bank. Are you worried that if we do have a severe recession, it sounds like, you know, could happen, that the Fed's credibility, which is already weak, you know, people start saying, get rid of the Fed?
Am I worried about them getting rid of the Fed's? Never got any credibility, Dale. The Fed's never got any credibility. It goes up and down, but it's never high at the end of the day, because they're there to sort of, you know, and the same is often true of governments as well. You know, they're there as shock absorbers. They're there to take the crap, basically. That is their main role. You know, they have to make the tough decisions that we don't want to make. I think that the role of central planning is overestimated. That's probably the best way of putting that.
Okay. Well,
right. A lot of things just happen. Like for example, okay, we'll talk the low inflation regime of the last 20 years. Everyone said that's because of central banks. Okay. They've taken a lot of credit for that, you know, in providing this kind of stable, you know, 2 decades that we've just lived through. But was it them, or was it the fact that China was coming up? We had that supply of cheap labor, cheap manufacturing. We had the fracking revolution. you know, that came through. You know, you had all the shale oil and gas, all of that cheap energy that came on the back of that. I think so. I think so. It's never one thing.
Yeah, the combination of that.
And I just think that the global economy is just too complex for any central planners to ever capably really sort of control it or manipulate it to any great extent. The Fed's probably the closest, you know, ultimately, but even in the end, you know, the market can push them around and does.
Okay, so in this environment, and you're giving these messages, you have ideas how people can best get through this period that you think is ahead of us, that's so complex that all we could do is how do you get through this complexity, Tim?
You keep your time horizon short, I think, is the main piece of advice. That there is the main thing that you need to do. You know, you just got to get in and out of the market. Don't think too far ahead. There's a lot of people. There's a lot of people that are talking about, you know, very confidently about the future at the moment. And, you know, I look, I think it was a couple of days ago, Stanley Druckenmiller, you know, he's been in the market 45 years. And he said he's never been as uncertain about things as he is right now. He's never been served up this level of complexity in 45 years, you know, and you think that you can just come in, do a couple of years, or, you know, listen to some random guy on Twitter and he's going to tell you what to do and it's going to work. You know, maybe they'll get lucky, you know, don't get me wrong, but that's not a good strategy. You know, but it is a brilliant time to be in the markets, pay attention, be tactical. And be tactical,
Didn't he say he can't, it's the first time he can't look out 6 months even?
Yes.
And see where we're going to be. And that's like their minimum time horizon for a lot of portfolio guys. They can't see out 6 months.
That's it. That's it.
Okay, you know, so a different environment.
Very different environment, and obviously more fiscal heavy as well. You know, I think that's the other thing that we're seeing. We've got, you know, the election coming up now, and we've got two big events politically. You know, politics is starting to creep into markets more and more kind of obviously now. You know, with the kind of the fiscal side of things. So we've got obviously the US elections coming up, and we've also got the Chinese Congress as well coming up. You know, what's China's plan for the future going to be? Now, I think that's a big question that people are looking at, because China's in real trouble, has been for, well, I mean, probably a good couple of years, to be honest. It's been going badly. But obviously Evergrande, when that happened, that was one of the big events, but it's just kind of got worse since. And there doesn't seem to be any real plan out of it. You know, they've kind of chucked a few things around. We'll do common prosperity. Okay, well, that means you've got to give more people to money, you know, more money to people so they can consume more, and you're going to create more of a consumption economy. You know, but at the same time, they're cutting back on all of their sort of big companies that were creating a consumption economy and saying, no, you can't do that, you can't do this, not that kind of consumption, no. You know, and the prosperity obviously that's being shared is going down because the economy is weakening and the housing market is decreasing in value as well, which is where a lot of people's savings and investments are. So everyone's pretty depressed. Okay, you know, it's not good.
That's a great segue, because there are a lot of people talking about pensions and the upcoming pension crisis, because they had a mandate of 7-8% a year, and with repression of rates, they went into, you know, alternative investments and higher risk investments than they should have. And with this break, and the insurance is so weak to cover any pension problem, that will have to be a bailout. Do you think that's a possibility, that we're going to have more bailouts and there'll be more on the social level? They certainly won't be banks again, will they?
No, I don't think it'll be banks again. Although that is something else that I'm keeping an eye on, is the kind of regulatory relief as well in the US. But I'll come back to that, because I think the social side of things is really interesting. Because that's where I see that we're going to see the reform, as I mentioned at the beginning. That's where the money is going to flow to. It's just, where in the world do people, you know, do investors and savers feel confident putting their money? You know, obviously, I think we've seen a lot of flows from west to east over the past couple of decades, because that's been where a lot of the growth has been. And maybe now, you know, as the kind of Western population ages, and Asian populations as well, the demographics aren't looking particularly good for growth either in a lot of the traditional, you know, South Korea, Japan. Well, Japan's been the same for a while, but, you know, South Korea and China especially, the demographics there are looking pretty awful. So do we start seeing that now, where savers need to start drawing down on those savings, and they need to go into productive investments that are going to generate growth, going to generate, improvements? Maybe
so
they
will
come
they
back
be
to the
like
West
tax
more.
shelters, maybe? Where,
Yeah,
like, I
investment
heard a
zones
guy
like we're
say,
doing in the
Tim,
UK. Mm.
that, we're not going to solve an inflation problem by tightening. If we have housing inflation,
Yeah.
create incentives for more housing.
I mean, I do
Government incentives.
I do kind of agree with that, but I already think that I think that it's a two-pronged problem. Okay, the housing market isn't necessarily undersupplied. It's more the case that low interest rates have allowed the sort of speculators to move in and price people out. That's the problem. The way that I see it, the housing became an investment because other things weren't good investments.
Right.
So
when BlackRock came in and scooped
and
them up after 2008, and they have
and it's been going on ever since. Yeah. And it's not just them. It's it's even private individuals as well. We've seen them all.
Will they disgorge? Yeah.
Will they disgorge of those things? I don't know. I don't know whether they will or not. I think the thing is, if you have higher interest rates, at least there's a decision to make. At least there is a decision to make. And I do think that we're probably at the beginning of that transition to higher interest rates for a while. Not necessarily that they're going to keep on going up, but they're just not going to go back down to zero again for a while. And we're going to have a period of, above 2% inflation. I've seen a lot of people talking about them adjusting the inflation targets as well, that maybe, we'll end up settling on 3 or 4% as the correct level of inflation for the circumstances. I don't really have an opinion on that. If they do, then they will, then they do, but I don't really think there's any particular way to predict that with any confidence. So it's definitely something to look for all of those things. And also the QT side of it as well. They've really been struggling, the Fed, to reduce the balance sheet, because who's going to come in and buy all of the buy all their assets, all their treasuries, the bills?
Who is?
This is it. Who's going to buy them? Especially if we're in a period where people are actually drawing down on them. Because again, over in Asia, for example, there's a lot of energy importing going on, and they're having to draw down on savings. The dollar as well is kind of wrecking things a bit. Bonds.
They need to turn the dollar.
Value.
It's a good Band-Aid. Central banks get together and turn the dollar. It's a Band-Aid for a while, and there's a lot of tactical things you could do with that if that happens. Right?
Absolutely, yeah. I think that will have to come at some point, whether that's shortly or whether they wait as long as possible until things really start breaking. They
better get going.
They better get going. Yeah, they're going to.
They better get going, buddy. And you know what? The going doesn't get better than to have a conversation with you. And you're unconventional in ways being very conventional. I think it's become popular to be so unconventional that just making sense is underappreciated. So you really crystallize things for our community, Tim, and I think you're a great speaker. If people want to hear more of your stuff, go ahead. What do we have here?
Well, that's exactly what I was about to say, that that's exactly what we try and do, is we try and simplify things down without getting too far into the kind of the economic speak, shall we say, that it seems like basically another language most of the time. We just try and make things make them make sense, so that's the idea. It's not to give you every single answer and make you understand it and you become an economic genius. It's just to apply context, show you where to go to think a bit more deeply about things, and just basically some context for the UK, for the market overall. And this is what I've done about the UK here. We've just been having a bit of fun with it, to be honest, because there's a real overreaction, I think, in the UK, and I think we'll see more of that in Europe as well. And so that's really what today's piece is about. But obviously we do this every day. We send out articles for free. Okay, obviously we've got the premium service as well, where you can come into Discord and sort of be around other like-minded people and sort of try and generate ideas and again just get more perspective on the world and everything that's going on, away from the media kind of circus, I guess. I was trying to think of a more polite word, but I really can't.
Tim, I actually feel the effect of coming in and seeing the ranges and currencies. Kind of felt like I was in a crisis, high alert, adrenaline type state. And after talking to you, it calmed me down.
Good, good. Maybe I can have a bit of
really good.
a bit of therapy as a side gig.
Yeah. Next time we do this, I'll lay down on a couch. Anyway, you're a great economic psychiatrist, man. So
excellent. I'll add it to the resume.
Yeah, and really thank you for your giving spirit to share your views with us. And
thanks for having me on, buddy.
I recommend people follow these guys at Macrodesiac. And Tim, rooting for you. Good luck.
Thanks,
in
Dale.
being
Likewise.
tactical. And I'll get in touch. We'll talk again this winter.
Fantastic. Yeah, look forward to that.
Winter is coming, right, buddy?
Yeah, it's not far away. Not far away, mate. That's going to be another thing with the whole energy situation as well, isn't it? I'll tell you what, just one thing, Dale, one really quick final thing. Okay, just here, the British gas price. You remember these gas prices that were out of control in Europe and everything else?
Right.
Well, they're now down below the level that they were capped at.
Right.
All right. So that's sort of, you've had that spike up, and we're now back down to the normal level. So it's actually not gonna cost anything if they stay around these kind of levels. Obviously, we'll see if that's the case as we go through the winter. But I found that really interesting. You never hear about this side of it, do you? You never hear about the side where actually it's gone back to something approaching normal again. It's always crisis, crisis, crisis. Yeah.
Well, I saw that chart and I'm going, it's no one's talking about it. And you're like a watchman for all the hype. So if you don't want to get hyped out,
I tell you, that's where there's edge. That's where there's edge. At the moment, the way that you've got soundbite sort of economics going on everywhere. Yeah. If you can just look at things and find the bullshit, if you'll pardon my French. Yeah. But if you just find it and fade it, once it becomes so obvious that this just can't continue, like these gas prices. I'm not suggesting people start speculating in natural,
Well, nice 3 drives to the top. I believe in 3's being completion. Anyway, I really, Tim, great. I'll be in touch with you, and have a great fall trading season, being tactical, and you have a great mission of simplifying really an insane world of economic YouTubers, right? Like me.
Yeah. Mate, we're all on the same mission, trying to make sense of it all.
Thank you, Tim.
Cheers,
all right,
buddy.
everybody. All right, everyone. You could join the team in 15 minutes on the Morning Edge. If you're not in that room, you're missing things. And I rest my case. Don't just count your pips, count your blessings, especially be tactical. I think that's really the takeaway from Tim today. Shorten your time horizon, like to 15 minutes. All right, everyone. See you for Turnaround Tuesday tomorrow. You're very welcome. David, Laura, Ingmar. See you guys tomorrow. Thanks again, Tim Vollans.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.